traders, so welcome back to the Sharks Trading Academy's weekly market analysis. And before we dive into the charts, please visit our website and claim your free starter package if you haven't. Simply click Find Out More, fill in your details, and click the Submit button. And shortly after, we'll actually send you the mentorship package materials for free. Alright, and now I'll see you in the technical analysis portion. The very first pair I'll touch on would be the dollar index. So over here we have a breakout structure to the upside and left behind a demand area with this as our ultimate liquidity highs. So this is where we are actually targeting for ultimately, right? So this is an area of demand that was left unmitigated, and you can see that over here it left behind an imbalance inside of these two levels, right? This week and this week. And this serves as a sell-side liquidity for prices to eventually reach based off the bearish price action over here. So now prices actually taps into the sell-side liquidity and now is currently in our demand zone. So with this projection in our head, we were expecting bullish prices to move towards this buy-side liquidity, of course, after taking out all of these levels. So what can we expect from dollar, right? We are still bullish buyers all the way up until this buy-side liquidity. And currently, prices just broke out of this high. So can you see over here? Although it is not very obvious, you can see that we have an 8 hours breakout structure, right? For me, personally, I use body close. I know some traders actually use wick as their breakout structure, but for me, I want to see a clear high, higher close over here. So now prices makes its way back, and from here, we are looking to target liquidity highs here. This would be my next buy side liquidity and ultimately into the supply zone. So I'm still buying dollar. Next up, we have the Aussie CAD. And here we have a supply area where prices are currently showing some sort of rejections. What we are looking for would be a lower time frame shift in structure. First, identifying where is our liquidity lows. So you can see that there is a swing low from over here. So technically, I'm looking for a break of structure here. So if the prices were to break this level, gives me a pullback into supply areas inside of this level, I can take sells, right, into liquidity lows over here ultimately. However, looking at the bigger picture, you realize that where did prices reject from? Where is this move coming from? You can see over here, we have a 2 days demand area. So can you mark out this area over here? This is an order block that was left unmitigated, right? So what does this actually mean? Because now we have a breakout structure leaving behind a demand area that prices taps into, we can expect bullish price action on the higher time frame, because you can see this is the higher time frame move, right? And this is the short or the lower time frame move, because this is an immediate downtrend, right? So now with this, we expect prices to make a lower low, yes, but because we are operating on a higher time frame, we expect this demand to actually make a break of structure higher. So you could be a seller, perhaps aiming some sort of levels inside of here, filling these imbalances before prices potentially moving higher to break this structure, following the higher time frame order flow by means of this level, right? And eventually tapping into supply areas inside of this zone or this zone over here. So you can see these are the supply areas that are valid for sells, okay? But we're only taking sells if we see a clean break of structure, then perhaps a pullback into supply areas inside of here. Otherwise, expect higher price movements to mitigate higher areas of supplies before moving down, okay? So with this, we are currently in a range between this level and this level, because we do not know whether this demand zone will hold until we see a break of structure of this supply area, because we know that sellers are going to sell here. So if sellers fail to push lower, then we expect this supply zone to get ran, flipping this area, leaving behind demand areas here for prices to go higher. So can you see over here now? Let's say prices comes back to fill this imbalance, breaks out of structure, leaving behind a sell to buy move for us to get involved. And now our target would be liquidity highs here. Okay, so this would be the trade idea for Aussie CAD. So next up we have the Aussie dollar, and you can see that we are currently playing in the weekly range. We have sell move inside of here, where prices came back to tap into supply areas here. And this means that if we see any shift or a clear break of structure by means of this level, then we expect a move down towards these liquidity lows and even lower, making a lower low because we are in a downtrend overall. So now prices are at a demand area. You can see over here we have a demand zone where prices taps into, give us a break of structure over here. This is a clear break of structure. And now I am bullish bias on the daily time frame because now we have a weekly demand area, and moving down to the lower time frame, which is our daily time frame, we see a clean break of structure here. So now this is break of structure towards the buy side, leaving behind potential supply areas for us to get involved over here and potentially here. So the best two areas to buy from would definitely be the daily demand areas here. And what you want to do is to buy low. You want to buy at a discounted price. So you measure the pips. You want to buy below the 50% area, right? And this is below the 50% area. So what you could do is to buy here, stop loss beneath this level, aim for the highs here, or buy below to get a better pricing and aim for the liquidity highs here. Otherwise, wait for prices to come back to this demand area, gives you the shift that you're looking for on the lower time frame to take prices higher. Which means to say that you are actually trying to confirm this demand area. So do the same thing over here when prices reaches this area and target liquidity highs. So this is the Euro AUD pair, and you can see prices taps into a 1 hour demand zone. And we identified all of these areas as liquidity highs to be grabbed. So this shift of structure that broke out, we were looking for a buy inside of this level or this level over here, but prices went on for a bullish order flow, right? Eventually break out this structure, failed to grab liquidity here. So this means that our target would be this area over here, or you can actually target this high as buy side liquidity. So now prices are in a ping pong motion where prices starts to grab liquidity here, make a run up towards this supply zone. So with this, we either expect prices to break out, then give us a flip where you can actually buy over here for continuations higher. Otherwise, wait for prices to make a low towards this ultimate refined area on the lower time frame, because this entire wick over here liquidates lows before the buyout that eventually broke out of structure here. So this means that this refined area is valid for buys, and I am looking for a buy at the lows, which is over here. So if prices comes back down, there are two ways to take this trade. The first would be simply buy limit here, stop loss beneath this level, aim for liquidity highs. Otherwise, wait for prices to come back down, give you the shift on the lower time frame, then take the buys towards this liquidity high. And with that, you can actually have your stop loss in a more aggressive position. So let's say prices starts to form this kind of a movement, right? Break of structure here, pulls back, taps into this area. So now buy, stop loss, aim for highs. So this is how you actually get involved in the 1:8 or 1:10 RR kind of a trades. Next up, we have the Euro Pound. Clearly a break of structure at this level, leaving behind supply area over here. You can see prices making its way up, failed to tap into our supply area, means that this level is not mitigated yet. So now we have a supply area to get involved. So how do we want to get involved? We want to see an accumulation over here to bring prices higher, liquidating these highs, then potentially distribute, ultimately breaking this level, okay, towards these liquidity lows. So this is my liquidity low, right? When prices break out of structure, left behind a low or a swing low over here for us to target towards. And now prices are at the demand area. So on the lower time frame, this may be an accumulation for prices to go higher to liquidate these orders over here, then taps into our supply if you get a shift over here, take sells, aim for this demand, perhaps bounce over here before moving lower to grab this sell side liquidity. So this is the trade idea for Euro Pound. Next, we have the Euro Yen, and prices now taps into a demand level here. Broke out of structure, leaving behind another demand zone for us to get involved. So typically traders would have already placed a buy limit here at the open, stop loss beneath the low, and aim for this high. Or they would have placed another buy limit at the 50% level of this demand area, stop loss beneath the low, aim for highs over here, or liquidity highs here. So these would be the typical trade ideas for traders who are trading these smart money concepts. For us, we are looking to confirm this demand zone, because the truth is that we do not know whether this demand zone is gonna hold. Yes, we have the break of structure here, but now I want to confirm this on the lower time frame, because we can already know that this downtrend, this sell side move, is a downtrend on the lower time frame. So now drop down to the lower time frame, maybe on the 8 minutes. What we want to see over here is a shift in structure. So let's say prices decides to go lower. Okay, so let's say prices now wants to go lower. We are looking for a breakout of structure here. This is the change of character. So if prices makes a low, breaks out of structure here, this is a change of character. And for us, this is an aggressive entry. So traders are looking to buy here, because this sell to buy move potentially left behind a demand area for prices to go higher. For us, we are definitely looking for a break of structure here. So this is the strong high. Prices breaks out of structure, leaving behind demand areas for us to get involved. And with that, we aim for higher highs here. So of course, we can liquidate some of our levels or positions at this high over here, because this is a swing high, right? If you manage to catch a buy move, maybe like this, so you want to buy over here, target this level, and ultimately this level on the higher time frame. So this is how I will actually approach the Euro Yen. Okay, on the higher time frame, we have a break of structure now, leaving behind this demand zone. You could already be a buyer now, or wait to confirm this demand area on the lower time frame, see the shift in structure, and aim for highs. Next up, we have the Pound Aussie, and currently we are approaching a supply area that was left unmitigated. And now this means that we still have opportunities to buy into our supply zone. So what is the current time frame, or what are the current prices telling you? We still have a break of structure. Prices are still delivering towards the bullish side. And now we are looking to catch buys into the supply area. So these are the two demand areas, or price of interest we are looking for. So if prices were to move lower and accumulate here, you can catch buys on the lower time frame and target this high and eventually into the supply area. So this is the first trade idea. The second trade idea would be to immediately buy off this demand area. So let's go down to the lower time frame to see if we can catch anything over here. So clearly you can see this demand area on the lower time frame. This demand area broke out of structure here. And now this tells us that we are actually able to catch a buy move into the highs here. So maybe go down to the lower time frame. Okay. So with this, if we see a break of structure here, then we can actually expect prices to make a move higher. And how? So let's say we have a break of structure, leaving behind demand areas for us to buy. And this buy may move into this supply zone, because you can see this is a buy, liquidates highs, sell. So this supply is valid for prices to actually go lower. All right. So if prices were to really react and move down from here, okay, assuming we have a break of structure, we get involved in buys here, pushes prices towards this level, then starts to distribute. This should bring us towards the lower zone over here. All right. So now you can see that how the lower time frame actually affects your pair, because you will never get a pullback into this area unless the lower time frame is telling you that it's turning bearish, right? So then again, what I'm expecting is that prices were to eventually move into your supply area here, then distribute into this demand zone, then you perhaps see some sort of a bounce here towards this supply, then the breaks, and this is where you get involved, okay, for sells even lower. So now, to sum it up, prices are telling you that it wants to go higher on the immediate time frame. We still have a range for us to get involved before it taps into the supply zone. So you can either buy here on the lower time frame or wait for a pullback towards this demand area, look for the shift, pull back, buy up into this level. Next up, we have the pound New Zealand dollar, and over here we have a demand area. So you can see prices are actually moving uptrend in the daily time frame over here, right? Then over here we start to see some sort of a sell side move, this break of structure, allowing prices to eventually move towards this demand zone. So this is a sell side liquidity because you can see that now prices creates these lows over here. We have a lot of orders underneath this level and prices haven't tapped into this area just yet. So we are looking for sells, and we can either sell here on the lower time frame for prices to move down into this demand to potentially accumulate higher, or wait for prices to pull back deeper into this area over here, or even higher towards this area here before distributing to move prices towards this demand zone. So any of these areas of supply is valid for prices to move lower until prices taps into our demand area over here. So dropping down to the lower time frame, we can see that over here is a supply area, right? Let me look for the exact supply zone. So over here, this is the supply zone. Prices taps into this supply, gave a shift in structure here. You can see this break of structure over here, left behind a supply zone that we could sell towards. Okay, this is supply area where prices are likely to grab liquidity to continue moving higher to distribute down lower. So as of now, we are looking for sells, and we are going to sell high. And where is the range that is high? This is the breakdown. This is the shift in structure. And the range to sell high would be this level. So look to sell here. You can place a sell limit at this level, stop loss above here, and aim for all of these liquidity lows. Otherwise, look for the shift on the lower time frame. So maybe go down to the 15 minutes or the 5 minutes to look for a shift for prices to go lower. Next up, we have the pound dollar, and prices taps in perfectly into this supply area. So now prices shift in structure. Can you see that this is the change of character over here? This candle, once it broke out of this level, this was a change in character, and now prices broke out of structure here. So this is the low that created the high, right? And actually traders are looking to buy here without understanding that this was a supply area. So once you see this level being broken, you could immediately take sells inside of this level, because inside of this flip zone, we call this the flip zone, right? Because this is a demand area. Prices taps into this level, gave a buy movement over here. So on the lower time frame, this was a clean buy, right? Maybe you could have gotten involved here, right? And now failed to make a higher high and broke down instead. So this immediately create a lower time frame structure. So let's dive lower into the 5 minutes. And you can see all of these areas are potential sell areas. This is a supply. This is a supply as well. So areas like this are supply zones for you to sell on the lower time frame. But since we're operating on the higher time frame, we are looking for a pullback that is deeper. This break of structure leads us to believe that prices are likely to mitigate areas over here. Alright, so now with this break of structure, prices are likely to give us a pullback before selling off. So now this is a supply area because this is a buy that liquidates highs before the breakdown, right? So the entire breakdown move happens here. So this is the high that we're looking for. And similarly, wait for a pullback. Then if you want, look for confirmations on the lower time frame, a break, a shift in structure via Wyckoff or some of the retail trading methodologies that some of you may have gotten involved. Sell here because it's the buy to sell move on the lower time frame. Aim for liquidity lows here and ultimately this level here, right? So this is the trade idea that we have. Either look to sell here upon limit order or wait for the shift in the structure, leaving behind supply zones to get involved lower. This would be a trade breakdown for the New Zealand dollar. So we actually left this trade over the weekends, and you can see currently prices are at a supply zone here, right? Taps into this area. Now we understand that as prices makes its move here, and if we see a shift in structure over here, we can aim for demand areas here or even at this level over here. So now dive into the lower time frame. Moving into the 30 minutes time frame, you can see what happened here. Prices starts to make its move higher, right? Creating all of these manipulation levels. So on top of all of these swing levels, right, there are orders. Even taps into this demand area to give a continuation move higher. To do what? To liquidate highs here. So this is the highest point prices have ever went into. Are we looking to sell here, or did we actually catch a sell here? Sadly, we don't catch a sell here, right? We're waiting for the break of structure, and the break of structure happens here. We understand that over here, you can see this is a demand area that was left unmitigated. So at this point of time, once prices breaks out of this level, we are looking for sells. And where are we selling from? The first area to sell from is definitely at this level. So we do not catch this area, right? And when prices starts to make its way down, we are looking for sells. We are trying to sell the entire move because we understand that this is our first target, right? You can see that on the higher time frame, this is the only demand area that we have, which means to say that on the higher time frame, if traders want to buy, they will have bought from these areas or maybe over here as well. Since prices failed to make a high, we can expect prices to run these high time frame demand areas over here. And that's why with this move down, we set a sell limit at this premium price. So we are just trying to sell high. And over here, this was the actual, I would say, supply zone that we're looking to sell from. So let me look for it. We actually took a 4 hours supply area. Here, you can see this is the supply. And we actually marked the 50% level because the 50% isn't mitigated just yet at this area. So when prices makes its move higher, we actually place a sell limit slightly higher than the 50%. Alright, we got tapped into. Prices looks really bullish at this point of time. You can see over here. We got filled at this candle, and we actually let the trade run out because we understand that on the lower time frame, prices shifted. This bounce over here has no proper basis because we understand that we are operating on the higher time frame. And on the higher time frame, this was the area to look out for. So prices shifted away from here, leaving behind liquidity to be grabbed later on. And that is why we held on to our buyers, expecting prices to run this low, tapping into this demand as well. Next up, we have the dollar CAD, and you can see that we are bullish buyers on this pair because prices first break out of structure, leaving behind buy side liquidity on the higher time frame over here, right? So can you see what is happening over here? Prices makes its way down, then finally broke out of structure here. So once prices breaks out of structure, we are sure that we are going to buy because this is a structural shift that is going to bring us to this area over here, towards this liquidity high. And what is this level that we have marked out? So we can see on the 30 minutes, it taps into a very nice order block and moved off from here. So you could have been a buyer here with stop loss beneath this level and target liquidity highs here and here, right? So moving forward, you want to see another break of structure here because you know that prices are delivering lower until this point of time. It starts to break higher and prices taps into this level. So saying if prices do not make a higher high now, then we expect lower prices to be met. Maybe these demand areas here, because all of these areas are buy areas. So we can expect a move like this. This is valid for buys here, right? Otherwise, simply wait for the next break of structure, because this is now, again, a shift and a break of structure. And if prices breaks higher again, look for pullback. So you have multiple buy opportunities, depends on how prices are being delivered. Lastly, dollar yen. We have a clean break of structure here, leaving behind liquidity highs for us to grab eventually, right? It doesn't have to be now, but this is what we have on the higher time frame. So you can see what happens here. First of all, another break of structure, leaving behind demand areas. So let's look down on the lower time frame to see what is happening here. So you can see on the 30 minutes time frame, prices taps into this area and broke out of structure over here. So again, at this instance, we were looking for a pullback into this demand area to move prices eventually towards this buy side liquidity on the high time frame. This was the trade idea. So you can see prices move off without us and now found ourselves in this area here. So can you see that all of these levels did not tap into our buy side liquidity on the high time frame, because this is the high that we're looking for. We are eventually trying to buy into the high time frame over here, because this is the ultimate break of structure, leaving behind buy side liquidity. So now prices makes a shift over here, leaving behind this demand area that shifted on the lower time frame. So this left behind an unmitigated area that we were trying to get involved way back here, and didn't come back to mitigate, leaving behind imbalances as well as a POI. With this, we are possible to place a buy limit over here, stop loss meaning this low, and aim for liquidity highs here. This is one possible trade idea. Otherwise, use this as a brand new POI, wait for prices to come back down, then look for the shift, creating a new range, then a pullback for you to buy into these areas here. And this is your new range, right? Because this is the new impulse for you to target. So this is another trade idea that you can get involved depending on you. And of course, this is your first take profit area, second and third.